Episode 2, Tales of the Tape. This episode's far-ranging conversation covers retail trading, tools for automation, trader psychology, favorite market memorabilia, and a bunch of other stuff. Our guest is Kirk of OptionAlpha, a company providing traders with the tools to find options trades that fit their style, backtest those prospective strategies, automate those strategies, and then there's a hearty dose of educational material involved in that as well. So, let's go. I kind of want from an entrepreneur that has evolved in the way that you have, kind of your concept of the building block.
I don't know if we ever honestly came to that originally. I think it kind of to a certain degree happened semi organically, just in the fact that what we had to build, we knew I feel like we had enough people that I knew a lot of traders just broadly through connections at Option Alpha and people emailing in that everybody did something completely different. So when we started to kind of script it out, what could we do? We knew it had to be insanely flexible. And even today, we probably have in our inbox 25 requests for things that we still can't do for somebody. That's can you do this little specific tweakable thing that me and 6 of my friends have only ever done and nobody ever talks about, and that's really tough. So I think from that angle, we always thought hey, you had to give people building blocks which could be scalable, like a deck of cards. The analogy I always use is and what I used originally is a deck of cards. Have you ever heard this with the mathematics around a deck of cards, the combinations you can come up with?
Oh, it's like if you shuffle 3 times, it's like
It's
a
infinite.
one.
It's just so big. Yeah, it's more than every grain of sand on earth. So when you shuffle a deck of cards, you're probably holding a deck of cards that's never existed before and will never exist again in ever forever. That's what we wanted to build. It's like a deck of cards. So you can do a lot. There's only 52 cards, but the combinations you can put together with that deck of cards could be infinite. So that's kind of the philosophy we have is how can we add these building blocks? But then the other side of it is it just has to be scalable. If things are going to run fast, wicked fast with market data, then you can't have something that needs to be calculated out in a sense. It needs to be pre-scaled or pre-calculated for that moment in time when somebody needs it. And so we had originally, just for as an example, we had originally had the idea of launching formulas, something called formulas. And so formulas was a way for people to build their own formulas, implied volatility rank divided by historical volatility times 1.25, right? But it wasn't scalable because the lag time just to calculate that out, even though it's probably a simple equation, when you're looking back historically across bars or dates or whatever, and you're putting all this thing in here and it's very clunky, and then you scale that to 1,000, 2,000, 5,000, 10,000 users, it becomes impossible to do. So what we decided to do, I guess, is create what we call recipes, which are kind of the blocks. And it's asking people, what do you want to do? Well, I want to see if my end goal is not to calculate implied volatility, it's to see if implied volatility times something else or some other indicator is X. Okay, well, great. Well, we'll do that. And then you can just put in the parameters that you want to know, right? And then we can add that block, that recipe to the platform. And that's a lot of what we do now. It's asking people what do you really want to do, or trying to discern what they want to do. And if we can do that, then we add that recipe to the platform. Recently, we added expected move for backtesting, testing how can you select strikes by expected move or a multiple of expected move, which seems like a really simple thing, but nobody's really asked for it recently. And then a bunch of people started asking for it. We're okay, of course, we'll pre-calculate it for that moment in time in which you need it, and then add it to the platform. So you can just say, add a position based on expected move. That's it, done, right? So
I kind of think of it as maybe a teeter-totter, where you can do something really complicated at low frequency. Maybe you could do something really, 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 really simple at a super high frequency.
100%.
But it's there's that fulcrum that's kind of dictating how you can do that.
We talk about that all the time. Is you can either do things really, really fast at scale, or you can do things super custom, like you said. And if we do it super custom, the lag time that it would take somebody to do that and our system to run it for an infinite possible number of users and combinations means that you just miss an opportunity because it would take too long to actually do it. Even if we ran, and we'd have like pay for the fastest Amazon servers you could possibly pay for, right? So like speed, of course, is a necessity, but it would just take too long, you know? So of course.
I mean, I think of it as like if you're retail, I feel like sometimes it's hard to conceptualize. You know, you're talking about, oh, the blink of an eye is like slow, you know, like those types of things. Um, so you know, I would encourage anybody to like find, you know, and they're everywhere all over the web, like download a fraction of a day's worth of historical data
Oh
about
my gosh,
whatever.
it's bananas.
And you end up with a CSV, and it's just a simple, relatively simple CSV, right? And just from a normal new laptop, you try to click that sucker and open it. And chances are your computer might just totally like, this is too much, or you have to toggle some settings in Excel, or you have to, and so
You
like,
couldn't even do, I mean, honestly, you couldn't even do it for a lot of things. Like we've been preloading data historically at 1 minute levels for a lot of tickers to like expand our backtester out. And it's going to take days and weeks to finish. Like just to preload it. It's like into a database. It's just, it's mind boggling the amount of data that's out there.
and then, you know, again, it just gives so much context, I feel, to everything else that kind of happens. And that in terms of like, well, why is just one small iterative update to a chip important? It's like, well, this
Orders of
stuff.
magnitude. Yeah.
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 Yeah. And then you get to the HFT people and they're like custom ordered field programmable gate arrays. And, you know, I mean, whatever. We could spend a whole couple hours on that.
Right. Right.
Um, but we can rewind because I do really like your origin story. Um, you know, if you can just kind of walk us through the how you kind of fell into options as I kind of conceptualize it, because you had a, you know, there's a street background, but it wasn't. I went to school for financial engineering, and then I interned for insert prop shop's name, and you know
Yeah.
that
Not a
kind of.
traditional, I wouldn't say super non traditional way to get into finance, but like the real origin story, I guess, is like I was always interested in finance. I was always interested in math. I actually like am very interested in science and like astronomy and stuff like that, but not that type of math. So like, it just never intrigued me at all. But like my mom would let me skip school and I would go to like investor conferences and stuff like that. She would take me to like investor conferences, and I always appreciated that. So like I had a real interest in it, and my parents definitely fostered that and allowed me to like, you know, hey, he's sick today, but we went to an investor conference in DC. I loved it. So I went to school for finance because I knew I wanted to do something in finance, and spent a little bit of time and interned at Deutsche Bank and did M&A. And I thought that I did like being in New York. I liked being that close to the street. I liked seeing that. I liked doing rotations on different things and seeing it. But I just didn't like that lifestyle. I think I told you, but like my MD would kids like call his kids at night and like tuck them into bed, and I'll never forget that. I was like, I'm never gonna do that like ever in my entire life. And so I was a REIT analyst for a little bit after that, and I liked that side of it too. Loved REITs. I liked going to meeting with the CEO and CFO and sitting down and talking to them and saying, hey, what do you think is going to go, you know, happen, and where do you guys see, you know, FFO and all that stuff. At the end of the day though, I didn't feel like I had found my niche. I didn't feel like, you know, even if you wrote a report, and REITs to me are, I wouldn't say they're easy. I don't want to like subclassify them. They're not super easy, but it's a glorified like bond on a bunch of different companies, you know, like steady cash flow, predictable. Like a REIT is just like a bond valuation on Walgreens or whatever is leasing the space. So it's not that hard to do and to project out. And I always found it interesting when they would report earnings, you know, then the stock would be down or the stock would be up. And it's like, wait, like these earnings are great or these earnings are bad. And like, it seemed very predictable that the stock should go down or go up, and the market just didn't care. And so I eventually came to the conclusion, I guess with a lot of introspection, that like I just didn't know. I didn't know anything about it, and I don't think any analyst really knows. And I don't think any amount of research I could do could like accurately, you know, judge what the market was going to react to. So during that whole time I was trading and trying to figure out what I wanted to do trading. I traded stocks, I traded Forex, I babysat trades overnight. I was trading options, and I just found that options gave me the most flexibility, no pun intended, like the most optionality to say like, how can I express my view on the market or security? And options were the best. It wasn't just up or down, it was kind of like range and timeline and volatility. And so I started digging in and learning and trying to figure out what I wanted to do. I would post on like an old Google blog spot, like what I was doing. People asked questions. I started answering questions. People said, these questions are all over the place. Maybe you can consolidate it into like a course or a video or something like that. And that was literally the origin stories of trying to figure out what this means and how it, could apply to somebody, and then trying to teach people like what I learned and what the markets are. And it was a very new thing, I guess, 10, 15 years ago. So
The part, that really resonated. I think for me, the moment was the concept that you can express a view that nothing's going to happen. I think that was for me the click in terms of flexibility. And I'm always interested when people when they realize that scalpel is available
they
to
don't
them.
even believe it exists. Like, because I still have people, and I even try to tell my family, like, it's still very hard to tell family and friends. Like, when I say like options trader, they're like, oh yeah, I've heard of those guys, and it's like, you're like, well, listen, like, I think it's a better way to do it. But now I look at long stock and I think, not that it's a bad thing. So I'm not like, if somebody wants to do long stock, knock your socks off. But I look at it and I think, wow, how inefficient. I could express the same thing with a fraction of the capital and then distribute the rest or keep it in cash, and and so that's how I think about things now. And I think about like that flexibility is so powerful. But of course it comes at cost with like leverage and having to understand it, which is the big hurdle for people. So if they can get over that hurdle and then they can get to the other side of just understanding, then it becomes okay. Now like, what are the different choices? Because now there are so many. Now it's not just buy shares or not buy shares, which is a very, very simple, at its base level, it's a very simple question to answer, right? Do I buy Tesla or do I not buy Tesla, right? But now when you get into options, now you've got series and strikes and combinations and wings and different crazy things. It's like, okay, what are the best choices, among those? So I guess that was like, that continued to be the next roadblock is like, okay, I know I like options now. So now how do I put this all together? How do I discern 1,000 different combinations into like, what do I want to trade? So
Like the average user comes to you. Talk me through what you talk them through, almost, if that makes sense. Like what's like the first stuff that you would tell them with the caveat that they know what a put is, they know what a call is, they've maybe done some self-directed point and click trading on their own, and this is their first experience with something that's systematic or automated, whatever you want to call it. Like, what are you flagging to them?
yeah, I think what it comes down to, I'm going to pull up some stuff here because I know I say this a lot. Um, but I think what it comes down to for us is like controlling what you can control as a trader, And I think that lesson is really hard for people because I think the easy thing for people is to think that they can control things that they can't control. And there's this assumption I feel like even with traders that have been around the block, to use that phrase, like they still think that they can control things. So like they still think they can control the direction, right? Hope, prayer probably goes a lot into this. Like, man, please market go up today, or please market go up today, or like if you just rebound 1%, like I promise I'll never ask for another rebound again. But like you can't control the direction. You can't control news, right? You don't know when things are going to happen. Can't control black swans. That's why they're black swans. And then the other thing is you can't control the math. What I think we try to get people to understand just from like an education training perspective is, okay, you can't control the direction. You can't control the news. You can't control black swans. You can't control the math because the math is what the math is for a position. But then how can you take those things and how can you take the things you can control and be really, really good at those? And if you can do that, then I think you find success. So like you can control your position size. You can control how much exposure you have on. Like if you're too bullish or too bearish, that's totally controllable. You can control to a certain degree, like the effect that news might have on different industries or tickers or sectors because you can diversify that out. You can trade uncorrelated baskets of, symbols. So if you can control all of those things, then it just becomes a game of how systematic can you be, right? Like, so now the next layer to that is, okay, I can control these things. I can get into good trades, trades that have positive expected value, for example, or maybe high probability trades, whatever whatever thing is for you. But like, I get into trades where I know potentially I've got a mathematical edge here and it's not a stupid trade, right? So if I can control all of these things, now the next layer to this, like the place that we gravitate towards or we elevate to as traders is, well, how can I get out of my own way? Because now what I end up doing is doing all the classic trading psychology and philosophy pitfalls, right? The endowment effect, right? Like thinking that, what you have is better, right? Or FOMO. I mean, like all of them, right? You got the FOMOs, you got the endowment effect, you got all these things. You like constantly tweak things because you think just because something is systematic, it may not be working. So you just have this like need to poke and prod as a trader, which I think is really hard. So that's where like bots and automations for us come into, is like helping somebody build a strategy and then elevate themselves above the actual execution of a strategy. I use the concept a lot in videos and presentations I've done of like this left brain, right brain methodology, where like the left brain is it's not necessarily that the left or right, like this is not perfect for psychologists, just how I kind of describe it. But this left side of your brain is the logical, rational, nuanced decision maker. Like we want to keep that side of trading. And I don't ever suggest you get rid of that. That's like, where are you in the economic cycle? What generally is happening? Having an awareness of an election or a Fed event or stuff like that, right? Like where rates are, where, there's a war going on, like that you keep, right? You keep all that. But unfortunately, what we do is we hand off the execution of our beautiful strategy that works perfectly in our mind, maybe even back tested well, historically based on a lot of numbers. We hand it off to the other side, and that side is a complete fool. I call it the fool because it's frequently oblivious and it's overestimator and luck seeker, right? So like you hand this off, and then the fool side of your mind makes so many stupid decisions. And if you've ever traded for a long time, it's like you get out too early, or you get out too late, or you position size too big, or you don't check something, or you don't do this, right? There's like all these little like death by 1,000 cuts. And so what we try to do is try to hopefully teach people and help them take a logical, rational strategy, like nuanced decision making, that's the good stuff, but then execute it using bots. Like, because then, even then, like it's the only real way to judge if something's working or not, So like, how can you execute and remove yourself from the equation so you become a manager, not like the pusher, I guess, of all the trades? Does that make sense? That's a lot.
No, totally. I mean, I think of it a lot as, well, you pretty much said it. Like you have to get out of your own head, and there's so many different examples of this. I think there was a study done, and it's like people that check their portfolio more infrequently, like have better performance if you're checking it. And I'm thinking more of a long-term investor,
Yeah, of course.
stock
Yeah.
purchaser. And that's kind of the same sort of thing, right? If you're looking every day, then you're over analyzing something, or on a different track, maybe the chain might be telling you something, the math might be telling you something, but then you're thinking, but I don't like the management, or, I had their product and I don't like their product. And it's like, well, is that really relevant to whether or not this is a good trade or a bad trade, right? Just like kind of trying to, it's impossible to remove all your biases because you're the one making the decision on what to back test. But, again, control what you can.
Sure.
So is that like a fair way to kind of interpret what you said?
Yeah, I think there's a lot. I think traders specifically, like options traders, have an obsessive need to mess with things, And I think that comes naturally, because like that's why we're here. Like we're not here as traders because we really, really believed in the buy and hold long and set it and forget it and check back in 20 years. Like we feel like there's something here for us. And I know that. But now the question is like, you're like stabbing this thing to death. Like you're cutting your trades up all over the place. And I have a problem with it only because I feel like people judge themselves and their strategies as being successful or not successful. But if you like really dig into it, like how objective were you in the execution of your strategy? There's no way you can objectively say it was successful or not successful with a limited position, number of trades, that's one thing. Like, you can't say something's a winner or loser after 30 or 50 or 100 trades. I mean, like, there's just no way to say that. But then it's also like, were you perfect on execution? Were you like perfect? Like, you never made a wrong decision. You never not checked something. You didn't like slip one time. Were you perfect on management? Exactly the same way. And if you weren't, there's no possible discernible way to know if your strategy is good or bad or what the issue is. Like, most of the time, it's probably you. I would say if you've got all the building blocks in place, it's probably you. And so now it's like, how can you remove yourself from the equation, from the execution side, right? So you don't mess up. I think even just, we were talking to maybe even before the recording about but one thing I say is like a new psychology challenge for people is this idea of like, well, maybe probably not new because I've probably been around forever. So I wouldn't say it's new, but like this idea of like the current event fallacy, like this idea that like this moment is different. And you're even saying like, actually it's not, because like even 60 years ago, like we were all saying the same thing. So, but it is a challenge. I think as humans, we are very tricky beasts. We can trick ourselves very easily into believing that we have some divine power to see things that don't exist or to foresee things that maybe never happen, And the challenge with trading is that directly impacts our trading and our financials, right? Which is tough for traders. And I don't like to see people quit. I think that's why people quit a lot, is because they get it, they like it, they get into it, they're very excited, and then they just hit these very early roadblocks. And then they just go, well, this sucks. Like, this is it. This thing, I tried it. It doesn't work. Let me tell everyone I tried it and it doesn't work. And I hate that. So, yeah. Or if I would have held on to this trade, then it would have turned around. Like, that hindsight thought process is very damaging.
I suffer from that a lot. Oh man, my idea was so good. I didn't put it on, but look, it would have worked. Like,
Sure.
like that's a terrible way for me to start to think about things. And I realize that, but just because you realize that doesn't mean it's any easier to
Right,
get
because it
yourself
creeps
out
in
of
later
it.
for the next trade. So the next trade comes in, you're like, well, remember that really good idea I had? Maybe I'll do it again. Maybe I'll do it just a little bit bigger this time because like this, and this are happening, And then you find yourself in a bad situation. I mean, like, yeah, I've totally done that for sure. 100%. I think if people spent more time on trade entry, then trade management would go a lot easier. So I think there's a very real sense that people have that if they get into a trade, then they spend, or I see people spend so much time on management. And I often relate it to like lipstick on a pig. Like, you can dress up like you can put lipstick and a dress on a pig, but at its core, it's still a pig. And like, if you get into pig trades, no amount of adjusting or hedging or fixing up can fix that pig trade, So most of it should be on trade entry. At the same time, of course, trade management presents its challenges. It's easy to have kids. It's not easy to raise kids. Like I've got 3, and every time that we've added a kid, it has not gotten significantly easier. It's gone the opposite direction, right? So like, getting into trades, very easy. Management, a little bit more challenging, right? And especially as you add kids, you add more trades, it becomes a little bit more challenging to manage. So I can appreciate that too. I think that's why a structure works. Like even with kids, you have to treat, like I have 3 kids. They're all completely different. We thought we were amazing parents after the first kids. We're like, this is easy. And then we had our second daughter, and we're like, oh my God, we know nothing about children at all. She came out just totally different, completely different from the first. And then we had our son who was a third, and he's even more different, right? Wow, I'm really beating this kid analogy to death here, but it's true. But like, you have to treat each kid is a little different. They learn a little different. They need to be treated a little bit different. Maybe I show love a little bit differently to them based on their needs, right? So like those are individual positions, and they're big positions for me, those 3 kids. But within that, we have a structure as a family. It's like we have do's and don'ts. We have rules, and we have things that everyone is required to do. And that maybe is kind of like that management aspect that you need as a trader, is like you have to manage your whole portfolio so that everyone does well. But if somebody's crying, like you can't make the other ones cry, like that's not good. Like that just takes it downhill. So yeah, I think that's tough, but you have to have a framework for that. Like, how do you manage those positions? And if you don't have a framework, that's a challenge. Like if you don't have an idea of how you're going to manage positions or what you're going to do, you probably need to figure that out pretty quick. And I would definitely say, like, obviously don't have kids unless you want to manage them, right? And want to deal with kids. Don't get into a trade unless you want to, like you have a plan for that. So.
And thinking of kind of caveats, like there might be somebody listening to this who's like, "Oh, Spencer, that's like the dumbest thing." This is my purely retail perspective.
Mm-hmm.
This is not. Fundamentally, I'm sure there's people that really would disagree about the trade entry being the easier part. And I mean, maybe this is like, I really like the child analogy. It's timely for me. No, we don't need to get into that. But my wife is with child, so this is like something I've really been thinking about recently.
You don't know yet.
And it's the first. So we're like, what I won't tell her that I have like an options trading analogy for this, because she'd probably just roll her eyes and like walk out of the room.
Right.
But now I do, and so I'll save that for conferences or something like that.
You'll understand. You'll be like, I thought I knew, and then you really know.
Well, and also, where that falls short is, your automated, not unattended mantra. So
yes.
I don't know if that really applies to the children, but
it can totally apply to the children, right? Like, go clean your room, let them do it. You should clean your room every week, but you got to check in. And my daughters will clean their room. My son is a slob right now, and like he's got to be attended to. For sure.
Oh, I guess that really does line up.
I think it could. I can weave it in there for sure.
Well, again, you're the one with the 3 kids, so it's your analogy, and I'm the rookie in the room here. I'm in the minors. I'm going to get called up to the big leagues in September, but again,
structure is important for kids. Like having them on a schedule, super, super important, and it makes a lot of sense. Like why? Like I think, not like on a spiritual level, but like these things are reoccurring things throughout life. Like if you think about like everything I said, I think applies to a lot of different areas of life too. It's like having a structure, but then having the flexibility within that structure. Like that applies to a lot of things in life, I think.
Well, something that reminds me of, I might mispronounce his name, but it's Augustine Lebron. He's a quant, and he wrote a book that I really liked. And like right in the first chapter, he's kind of talking about how people don't realize how almost everything in life is a trade. Like every decision you make,
100%.
Am I going to cross the street where the light is saying don't walk, or am I going to wait and then cross the other side of the street? Am I going to have that cup of coffee in the morning and be a minute late because the line was long at, my coffee shop, but then I'll be more caffeinated? And, like everything, you're making these split-second decisions, and you probably don't even realize it. But in a way, every one of those is a trade-off. And so
calculated trade-off, right?
Everybody is a trader, and they just don't realize it.
I mean, like probably you could trace your decisions to where you are now to a decision that led you down the path to here, right? So on some degree they are, because the magnitude of them grows. So,
I mean, we talk about past dependency all day long too. So I won't go there. I feel like there's a lot.
We digress.
We're on the analogy road trip.
I love a good analogy for sure. Love a good analogy.
Well, especially because it can be so esoteric. I mean, to your point, I tell somebody I'm an options trader. Oh, one of those guys,
Yeah, I love it. I still don't know what to say to people. Honestly.
Trying to describe it is, I usually just, hey, you know those like movies where there were guys like shouting at each other and stuff? It's like related to that. It's really hard to try to crack.
Yeah, I really struggle with trying to like figure out how to tell people what like our company does, and like I try to. I'm like, we're an options automation, so I'm like, oh, okay, like those are cool words. I didn't know you could put them together. They have no idea. So
it's like, yeah, that is clearly English. I don't know what that sentence
means.
I've
heard all of those words, just not. I didn't know there was a thing to put it together. Yeah.
What's your what's kind of the key use case? What's like the common thing you're seeing traders do when they're, and again, we've already talked about how everybody has kind of a a different tweak and a different desire, and that to a degree, no two strategies or implementations are the
Mhm.
same, but any sort of commonalities that you could draw out.
I think the thing that we're finding that a lot of people use it for, maybe intended to a certain degree because we built that for us. Like we're all trade. Like everyone who works here is a trader, and like we wanted to do this as not only just our jobs, but like a passion project of ours because we didn't know. Like we wanted better tools. I think what a lot of people are using it for is surfacing better trades. Like the way that I used to go into the market and find trades is completely different than how I do now or how my bots do now. Even if I wanted to find a trade right now, I would approach it completely different. So the old way, I say the old way of doing it is I know I want to trade insert ticker, which how do you know you want to trade that ticker? Just because is your favorite? Is there a reason? Is there a market news event? But like, okay, something led you down the path, potentially subjectively to trading a ticker. And then you go to a certain chain and you say, well, I'm comfortable trading the 30 days or comfortable trading, whatever, 0DT. And then you select your strikes because you're comfortable with those strikes, or you heard somebody talk about you should do a 30 delta iron condor, right? And then you have your trade and you put your trade on and you're happy with your trade. And then you go try to hunt and gather for the next trade. And I definitely used to do that. I used to like mechanically, as much as I could, because I believed in the mechanics of it, I would mechanically get the same trade on because I wanted to keep things very mechanic. So I'd do a 30 delta iron condor or 20 delta iron condor or whatever, because that mechanically kept me in sync with, even before we did bots and automations, I wanted to be as mechanic as possible. However, the downside of doing that is that you don't know if that's the best opportunity right now. And so now the way that I approach it, and a lot of people approach it, is okay, there's a universe of trades. How can we use data and technology to surface the trades that fit my criteria? Well, I know I want 60% probability of success or 100% reward to risk or positive expected value, and I want the trade to be between 20 and 45 days. So I don't care if it's exactly 30 or, it just can't be a 0 or whatever. Now surface that list of trades and then pick from that list or continue to, filter it. And that approach is completely different now because I think I would say 99.9% of traders still use the older approach, which is to hunt and gather for the trades that they're comfortable with versus shopping for a trade that fits your parameters, right? Like, oh, I didn't know that this is actually looks like a better trade. And to me, if you can get into those better trades, you can better build a portfolio that kind of represents what you're trying to go after because the markets are moving so fast. Like, like gold right now is a huge hot topic, right? Been crazy, right? So volatility on gold and like trading volumes on gold are going up. But like, I don't know, a while ago, like nobody touched gold, like not even close. And so now you get these like, okay, this is an opportunity here. Maybe there's some tradable edge over there. So now you can move to that side very quickly by surfacing ideas versus just going back to the same old, horse, if you will. So
I remember there was that brief period where, on the Reddit, the subreddit of much acclaim, or notoriety, perhaps, there was that moment where like SLV turned into like a meme stock. I don't know
yeah,
if you remember that. And that was one that really kind of boggled my mind, where it's like, well, first of all, this isn't quite the low float, heavily shorted type of ecosystem that maybe you're
yeah.
accustomed to. But I think of that example when I see the action in gold right now and all-time highs, and really makes me want to buy some physical, actually. Talk about diversifying,
Might be a market top indicator right there
Yeah.
if you get some people buying some physical,
I am the epitome of the shoeshine boy being like, hey,
Yeah.
I got a good idea,
Listen, I love her to death, but my sister-in-law, she knows I've talked about it before. She knows I talk, but anytime she calls me or texts me for ideas, I know we are at the turning point. So she has not texted me for gold, but she has nailed every Bitcoin top. I'll tell you that. She's been really good, and she's done a really good job of that. So
there what I mean, it is interesting how I can't remember if this was I was listening on audiobook. It was one of the newer Market Wizards series from Jack, and there was a guy who was actually talking, and of course he's in Market Wizards. This dude was really successful, and he had an example. He was like, there was one type of trade I would put on where it was the opposite of whatever this other guy told me about.
Yes.
And clearly this is like a little bit more back in time, because I don't think, if you're at a CTA or a hedge fund or, like that's
Inverse
probably
Jim Cramer, I think, is the fun one on Twitter right now. And it's so good. I mean, it's really good. Yeah.
Gotta ask you, not to repeat, but I like your bookshelf. Favorite item.
Favorite item, I still say probably this. Probably this is a good one. We talked about it before, but there's a lot of. Is this video going out too, or just audio?
Oh well, the video will go out on YouTube and stuff.
Yeah, so we got like that. This one's funny. 2019. Was that 2019? Yeah. So I had a guy make this and send it to me, like a member, and he made it. And this is the distribution of the DIA in 2019, like to scale. Like the 1 standard deviation, 2 and 3 standard deviation distribution of DIA to scale in 2019. And a guy made it, which is actually pretty cool. That's why I put it up there. But it also is a pretty funny reminder, because the next year the standard deviation was completely not normal distribution, which markets are not normal distribution. So it's kind of like a reminder that like people think markets are normally distributed, but they're not. But I like the option contract here. I've always liked this one, just like the evolution of like going from paper where somebody buys and writes in all their stuff, and then the other side takes the other side of it. I've always liked it. I've got Weimar Republic dollars up there. Like that's $1 million mark. That one, they stopped printing on the other side. There's one further up that I have that's a double-sided $1 million mark. But that one is one when they literally didn't have enough money to print the other side, which is like so fascinating to me. And then some old pit games. The original Nike stock that I bought, that was the first stock I bought. My dad had to co-sign because I think it was like 14 or something. So I've got some fun stuff up there.
What was the first investor, going back to that, I'm sick today, I'm going to go to an investor conference because my mom's cool. Do you remember what the first one was?
Totally. It was Invest Tools, which then got bought by Thinkorswim and TD Ameritrade. But they used to have a conference, and they had one in DC. And I was like, Mom, I think I want to go to this thing. And she's like, how did you even hear about this? I was like, listen, I just think I want to go to this thing and like learn. They're going to teach us all kinds of stuff, like technical analysis. I don't even know what that is. And she took me, and she like wrote a note, and she was like, Kirk will be gone today. And we went to the thing. And it was like back in the old school days of like super hard pitch when you were there, and we didn't sign up for anything. So I'm thankful that my mom was like, we got to get out of here at this point. Like we came and we did what we needed to do. But it was really cool. Like going to those, my parents were in the mortgage industry forever. So we went to a lot of real estate conferences and investing conferences and stuff like that. I jokingly say, but it's not a joke, but like Sundays were open house days. Like after church, we'd go like look at houses and like talk about if it was a good investment or not, like weird stuff, but like we used to do that. So I've always had that.
Well, there's another thing that we actually have in common. My parents were not in real estate, but for whatever reason, they were like perpetually in the market for a new house. We never got one, but I think they were just kind of, and I'm an only child, so they'd always drag me along. And so I end up in high school or college, and I remember being in a room, and I made a comment about the crown molding, and everybody looked at me, and I was like, okay, this was not a shared experience that most of humanity has had growing up, and I just realized that.
It's funny because 2 weekends ago, my daughter had a basketball tournament in Pittsburgh, and we're like an hour and a half, 2 hours outside of Pittsburgh. And right next to where the basketball tournament was a new development going up, and there was an open house. And I was like, hey, let's go buy an open house. And they're like, they thought it was the craziest thing. They're like, Dad, we can't go in there. That's somebody's house. I'm like, listen, this is not somebody's house. Like we've never been in one. But they loved it. And so the other weekend, they're like, hey, any open houses? Like, and I'm like, listen, this is not a thing we're doing anymore. But they really enjoyed going through and, kind of looking at it. But I don't know. I like that aspect of like introducing people to that. I thought it was good for me, so hopefully I can do it for my kids.
I mean, I remember, I think it was maybe too soon. I didn't quite get it, but I think it was third grade, maybe fourth grade. And, we had the like stock trading competition in elementary school
Sure.
where it's like, you're just blindly looking at it. You're looking at the newspaper, right? And you're like, okay, like, I feel like AbbVie or something was the stock of the day. And then, it's like you get the paper delivered to the classroom the next day and you see how your thing did and you're tracking it and it's pre-decimalization and you're like, oh, okay. And then like now I realize like, well, I did learn about fractions. I didn't really learn about stocks, but something came out of this. Why is Berkshire the most expensive thing on the planet? Like these are the takeaways that I had, not really anything else, but
people still say that. That's the craziest thing. It's like, it's actually still, people still say that. Like, it's too expensive.
Nothing new under the sun.
Yeah.
Just evolution.
Right.
As always, our required house cleaning items, the views and opinions expressed by the host and guests of this podcast do not necessarily reflect those of Cboe Global Markets and are for informational purposes only. They should not be construed as financial advice. There are significant risks associated with transacting in all of the financial instruments described herein. It is very important for market participants to understand their own risk tolerances. To review all relevant disclosures and disclaimers, please visit us at www.cboe.com/US_disclaimers.